So I'm going to be talking a little bit about Nadex. I'm not going to get too hung up on this because Raleigh gave me about a half hour to deal with. But what I'm going to talk to you about is what Nadex is all about. And then I'm going to present two high probability strategies that work just, I mean, a lot of the time. So getting started, first of all, the obligatory disclaimer. Binary options, trading binary options involves risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. And always remember that past performance is not necessarily indicative of future results. Okay, so binary options, quite simply, are yes or no propositions. If you think that the Dow is going to be up today relative to the open in the morning, or whether it's going to go down, you can find the proposition in Nadex, and you're just basically going to say, I think the market's going to be higher than 1930 if that's where it opened this morning. And if you're right, and let's say the marketplace thinks that there's about a 50-50 chance on it, you might be risking $50 to make $50. If the market is above the open and stays open, you're in the money and you're good. If it's not, you pocket nothing. So they've been called all or nothing propositions. They've been called yes or no trades. But every trade is capped with every contract is capped with a maximum value of $100 per contract traded. So you can't have a trade that runs away from you. And the downside is your risk is also limited. Your profit is also limited to the upside within $100. So if you think the gold today is going to be above 1,250 by 1:30, and the market determines that there's a 70% chance that's going to happen, and you place a market order, you would be risking $70 to make $30 on a high probability trade. Now, conversely, if the market determines that there's a 30% chance that it's going to be below 1250, you would risk 30 to make 70 on a lower probability trade. And there's a little bit, the market's not with you, but sometimes these things happen. A little bit about Nadex. I'm going to move through this stuff really quickly. It's a North American derivatives exchange. It's based in Chicago. It's regulated by the CFTC. You don't need a broker. When you open up a Nadex account, you're trading directly on the exchange, paying broker commissions, but you will pay a 90 cent per contract fee to open and settle a transaction if you're in the money. And Nadex is available only to people residing in North America, U.S., Canada, Mexico, and U.S. territories. So if you live out of America, overseas, Nadex is currently not available to you, but there are some other binary options, outfits in other parts of the world. You just want to really pay close attention to them to make sure that that they are on the up and up. Best part about Nadex that I like is that it's federally regulated, and that your accounts are actually held in a dedicated account. So what you're going to do with Nadex is you're going to choose what the forex propositions, stock indices, common commodities, and you want to select the asset that you want to trade. For example, if you want to trade the pound dollar, that's a proposition that you can do with forex, with Nadex. You can trade the E-mini S&Ps, the E-mini Dow. There's the German stock indices, which I'll talk about, and you can also trade common commodities. Now that you know what the markets you're comfortable trading, then you're going to look at a strike or an expiration time frame, and that can be on a hourly, daily, even a weekly basis. So whatever time frame you're interested in trading, you can do that. And then you determine whether you want the direction of the market, whether you want to buy or sell a proposition for a binary option, and then you place the order directly on the exchange. You can let your contract run until expiration, especially if you think it's in the money, or you can close your position out early and limit profits or losses if you think the trade is potentially working against you. I guess one of the best things about Nadex is that, especially if you're a small account holder, you can open up a Nadex account for $100. Don't recommend it, but you can do it. The maximum commission you could pay on 10 contracts per side would be $9. If you trade 20 contracts, it would be $9. And if a contract expires out of the money and you're not successful, you're not charged a back-end settlement fee. So quick summary, based on a yes or no proposition, you have limited trade risk because you're trading over a defined time period. You can't get stopped out. I mean, unlike traditional trading. So you got spike protection, and it's federally regulated. Over my words. I'm going to give you a quick look at the Nadex market, the Nadex platform. And right now we're entering a time of day where a lot of markets have already closed. The FTSE, the DAX, S&P 500 is closed, and they're basically indicated by red X's. I can't trade them. But when you take a look at these, at any one of these entries on your watch list, you can the bid and the offer. You can see the size on each side. You can see what the underlying index is saying, so you know kind of where the market is currently, and then you can make a decision based on that. So, for example, the Aussie US dollar pairing is right now at 88.586. So I want to find. I'll just take 88.6. I'll take this proposition, and I can either buy it or sell it. So before I do that, I want to see what's going on with that particular market. So I can come over here, click on the chart of that, and blow it up. And then there are a lot of this is a 5-minute chart. So if I wanted to take a look at this over a shorter period of time, and if I wanted to throw the Ichimoku cloud on there, I could do that. Tons of indicators up here. The ones I like to use the most, the one I really rely on the most, is the 8 exponential moving average, which one presenter, Bigelow, basically calls it the T line. And I like it because the market just hugs that indicator. Whenever it gaps away from it, it always returns back to the roost. So, and if it's riding in line with it, if it's riding below the line, typically it's going to be down. If it's riding above it, you're in a little bit of an uptrend. And it's just something I've gotten to be quite comfortable with. Moving averages, I like to use the 50. Sometimes I like to keep my charts really clean. So if the market's riding above the 50-day moving average, we're in an uptrend. And then stochastics, just kind of showing you some of the things you can do with this. There are a ton of indicators you can play with. Use the stochastic set at 1233, and it's showing me right now that we've just come out of a oversold condition. The market's moving on the way up. We're riding above the 50-day moving average. So that's just a little bit of a view of some of the things you can do with Nadex. Very, very simple to learn. I mean, there's very little complexity to this. And then on the left-hand side of the control panel, you have a pick list of the indices that you can choose from for binary options, or they also have spreads now. Commodities, copper, gold, corn, silver, soybeans, natural gas, crude oil, and forex pairs. There are 9 of them. 9 popular ones: euro, USD, dollar yen, pound yen, dollar, Canadian dollar, also US dollar, and so forth. So that's a quick view of Nadex. And what I'm going to do now is I'm going to kind of get into how I use Nadex and then talk about a couple of high probability strategies. If you want to find out more about Nadex, you can go to the Nadex, nadex.com, and they've got a ton of videos on their site. Great education. So if you want to look on the videos page, they'll give you a library of videos you can take a look at. And if you want to go over to trading, down the demo trading platform, and basically all you have to be is a North American resident. You pop in your username, first name, last name, phone number, email, done. You'll have a 2-week trial to Nadex with $25,000 in play money funded. So you can test your strategies and see whether it's right for you. Trading Pub, our website, we've got a lot of good information on Nadex, and you go into free education down in Nadex. There's an actual expanded, this most recent article is an expanded view of what I'm going to be talking about today. But there's just a lot of articles in here and webinars you can reference if you're interested in this particular instrument. And then finally, once a month, I put out something called the Probability Report that is dedicated to Nadex. And I have a calendar of monthly webinars that are being hosted by Nadex. I find an article of the month and a video of the month that you can review, and that's also available. Okay, so here's my trading plan. I've been with Trading Pub for a few months, and I've recently gotten back into trading the markets, and they wanted me to pay attention to Nadex and get to learn it. So I dove right in, and as soon as I got into it, I loved it. Many years ago in the early 2000s, I had some money. I traded stocks. I traded quite successfully, but I really didn't, I didn't have the benefit of the knowledge that I've learned since I come on board with Trading Pub. I probably would have done better, but I did quite well. Didn't trade for like the last dozen years, and now I've gotten back into it. Decided to jump into on board with Nadex with a small account, which I funded for about $1,000. I have a daily trading goal. It's 50, and the key is money management and risk reward management. When it comes to risk reward, risking 2 to 1 makes me cranky. I don't like risking $70 to make 30. It had better be a slam dunk or a locomotive that I'm just sort of hitching on to and riding to expiration. 1 to 1 is much better. I'm okay risking 50 to make 50, but the plan has got to be solid and has to have better than a 70% probability of being a winner. 1 to 1.5, 1 to 2, anything above that makes me really happy. And I have some things that I'm testing where I'm routinely risking $15 or $10 or $20 to make $80 or $85 or $90. And then finally, I don't like to risk more than 5% of my account. 2% is better. So, I can sleep better at night when I'm, managing risk reward, managing my money. And basically, how I try to optimize risk reward, and essentially I'm going to blow through this slide. I don't like market orders. I like engaging the market on my terms. I place a lot of limit orders, and I'll show you how that works in my strategy. So what do I mean by the market on my own terms? This is a Nadex order ticket. And in this particular case, the S&P 500, the proposition was that it was going to be greater than 1941 by the end of the week. And it was very much in the money at that time if you wanted to sell the market. So what the ticket's going to tell you, it clearly tells you on the bottom that if you're going to sell the market at the current market price, Your maximum profit is going to be $20. Your maximum loss is going to be 80. Once again, that doesn't excite me. I've got another day or so. Things can happen in the market all day long. What I'll do is I'll amend this order and flip the script. In this example, I just said, no, I'd much rather risk $20 to make $80. Take it or leave it. And I'm surprised how often I actually get a fill. I've got a checklist in the evening and in the morning of things I do. I review the day. I use my favorite indicators. I'll look for setups. If I trade at nighttime on Nadex, it's usually a trade where I'm risking $10 or $20 to make $80 or better because the risk is low. It may or may not fill, but if it does, and if the market's moving the direction I think it does, I can often wake up pleasantly surprised. I have a morning checklist where I check the German market, the pound-dollar market. These are two markets that I'm very active in trading in Nadex. And then I check my other favorites, the E-mini S&P, and I take a look at some of the commodities and see how they're behaving. And if I see a nice setup in play, I'll engage it once again with a limit order or on my terms. Okay, I've gotten all the background stuff out of the way. This is a strategy I learned about a month and a half ago. And I was sitting in on a webinar that was being done by Tom Busby, who's the founder of Diversified Trading Institute. And Trading Pub is actually co-located in their headquarters. And Tom has been trading for years, and he did a presentation where he had his 30 observations. And observation number 5, he just kind of blew it past me really quickly. He said, hey, the 7 a.m. Eastern Standard Time, at 7 a.m., that bar for the hourly bar for the DAX will be a pivotal point in the day, and it will set the direction for the market. And he just kept on going. And I said, okay, that's a binary proposition. That's a yes or no proposition. I like this. I need to check into it. So I went back to the DAX market. I looked at the charts and I eyeballed it on a daily and hourly basis. On the hourly charts. And son of a gun, he was just eyeballing. It was right. So I went in to test, and I found a really, really good strategy that came out of this. So I'll talk about the rules of it, and then I'll show you how it plays out. So to set up for this strategy, what I do is I get up I'm in Central Time Zone. I'm in Austin. I'm up like around 5:30 in the morning, 5 to 5:30, and I'll check the economic calendar on investing.com and see if there's any news that's pertinent to the German markets. Today there were 2 pieces of news on import prices, and there was some positive news at 3 o'clock Eastern Time. And I felt that would be probably bullish for the DAX. Later on in the day, there was a slew of U.S. Weren't so bullish, but they have an impact on the pound dollar, which I'll talk about later. Okay. So I have my indicators in play. I'm going to show all this. I take a look at the daily, hourly, 15-minute and 5-minute charts of the DAX, and try to basically divine from that whether I think that the DAX is going to move up or down within a very short period of time. So a couple of things about the DAX market. Nadex basically offers you propositions you can trade off. And it's important to know that with the DAX market, they are set at 20-point intervals. I choose the 7 a.m. to 9 a.m. Nadex time period. And at 7 a.m. Eastern Standard Time, what I want to do with that bar, I want to choose the closest strike price in the money. And what I mean by that is if I think that the DAX is going to go long that day, I'll buy the DAX and try to find the first strike price that Nadex will give me below the opening of the 7 a.m. hourly candlestick. And conversely, if I think that the market's going to be downtrending, I want to take the first strike price that Nadex gives me above the opening of the 7 a.m. hourly candlestick. And then what I'm going to do is place a limit or a working order, risking $50 to make $50. And then that's all there is to it. So let's see how this plays out. Unfortunately, as I mentioned earlier, in Nadex, I mentioned that the German markets are closed right now, but I can still hopefully take a look at their charts for today. Okay, and I'm going to move to an hourly chart. It's going to show you the past several days, so this is kind of fun. So Nadex opens at 3 o'clock Eastern time, and here's today, moved up, moved up, moved up. I'm looking for the 7 o'clock bar, and today actually was a losing day for this proposition. I've got a green bar moving up, and my rule would be this thing is moving, moving, moving up. I like the upward trend of it, but I want to pop in my if I want to pop in my favorite little indicator, the T line, which is like my security blanket, put that in there. Okay, so it's moving up, breaks through the T line. It's riding up there really nicely. It's 7 o'clock. Nice bullish move up. And today, actually, I'm sorry, it wasn't a losing proposition. It was a no fill. And the reason why, and Nadex just kind of bailed me out. When the market opened, it opened at 1921, and the nearest strike price to it was actually 1924. Now, my rule is to open the first proposition below, if I think the market's going to go low, below, which was 9,004. That's where I placed my order. It never filled. The wick never came down there, so I had a no fill today. If I would have decided to cheat up and grab the market where I thought it would be just to get a piece of the action, the next bar came down and would have taken me out. I would have lost, or I would have had to have bailed early. Today was a no fill. Going to the day before though, let's say here's a 7 o'clock bar, very, very bearish, and I would sell the market. I have a little history of downtrending here. I'd sell the market above the open of the 7 a.m. bar. By the end of the following hour, I'm to the good. So that's $50 per contract traded. Good. Risking 50 to make the day before. Okay, 7 a.m. bar, big upward move. It retraced back to the T line. It gapped away, came back to the T line, moved back up. It's bullish, closes bullish. I bought down below this bar, got it filled, and that's a successful trade. And onward and onward. I mean, almost every day it happens. I'm going to show you the results of what I'm talking about. So when I see things like this and I see theories like this, I've just got to test them. It's in my nature to do this. So I'm going to go over the last 10 days. And so here's today. It was a buy, but I got a no fill. So there was zero today. Yesterday, it indicated it was a sell. I picked up a $50 profit. The day before was a no fill, actually. I never got a wick on the candlestick below the open in the market, and I didn't want to chase it. If I would have chased the market, so over 10 days, I've got 1, 2, 3, 4, 5, 6 wins, 2 losses, 2 no fills for a total of $200 on one contract traded, risking $50 to make $50. So I want a little bit more history. The previous 10 days, I had 9 wins, 1 loss. So that netted $400. The previous 10 days before that, this is all the history I have right now, which is 30 days. I had 2 losses, 8 wins. So I'm running routinely. I'm running routinely about an 80% probability of being in the money, risking 50 to make 50. And when you do that, you're good all day long. So that's a quick overview of the DAX program, and it's just super easy to do. Once again, to summarize it, the DAX runs on 20-point intervals. You choose a time frame between 7 a.m. and 9 a.m. That's the time period you want to do at the opening of the bar. You want to buy below the candlestick. If you think it's going to go long, you want to sell above the candlestick if you think it's going to go short. And place a limit order. If you risk 50 to make 50, good chance of getting filled. And as long as the probabilities are strong, I'm fine with that risk reward. So that's that particular strategy. And I'll get to questions in just a second. Raleigh, am I okay for time, or do you want me to do the pound thing, or do you want me to wrap it up?
Strategy.
Okay, just a yes or no. Did that strategy make sense? You're not counting pips. You're not counting points. You're not setting stop losses. All you're doing is finding a strong directional move, riding it for a little less than 2 hours, and pocketing a one-for-one a one-for-one risk to reward. Okay, the next one is good for the forex traders out there, and it's based on a really successful forex strategy called the London Open. It's called a lot of things. The London Open breakout strategy. I just call it the London Open strategy. And basically, it's set on a proposition. The rule is super simple, and that is that the daily low or high will be established between 2 o'clock and 5 o'clock a.m. Eastern Daylight Time when the London market opens, when the European London market opens. The opposing daily low or high will occur between 8 o'clock in the morning and 2 p.m. in the afternoon, New York time or Eastern time, after the opening of the New York market. So it's kind of like a seesaw. If you can imagine, with the hours of 6 and 7 being the fulcrum, if the low appears in the morning in Britain, the high will show up in the afternoon when New York is trading, or from 8 o'clock to 2 o'clock. Conversely, if the high shows itself in the morning, the low will be in the afternoon. And that is a very binary proposition, and it works with great frequency. And so, why does this happen? Well, at 2 o'clock, the European market opens. European financial markets open. 3 o'clock, London exchange opens. Also at 3 o'clock, it's the final. So you have a lot of financial transactions being processed in a very short time frame. In a 1 hour time frame, it's kind of like crimping a hose. It has a tendency just to push the pound and its associated currency pairs up or down, which basically sets the tone for the day. And there's so between 3 and 4 a.m. there's a huge volume of transactions, and usually the move is noticeable. And if you don't see it, it's not a day to trade it. So here's a little diagram that illustrates that. All the way on the left of this chart, we have 2 o'clock. I have a little arrow where the European market opens. And you can see that the market moves up a little bit, and then it sort of chops back down a little bit. And then the London market opens, and the Tokyo market is ending. All of a sudden, there's a big push of transactions to the upside, which basically hit a peak at 4:20 in the morning. Once again, the lower the high of the day will establish itself between 2 and 5 in the morning, about 75 to 80% of the time. So when I got to 4:20, I said, now is this the high or is this the low here? And I just sort of took a quick look, and sure enough, the market started to come back down. I said, it's the high for the day. Also, if I took a look at the dailies on that, the market was on a definite downtrend. So the longer time frames, the dailies tend to give a bias where the market may well be moving. So there was some technical analysis that gave me a bias toward the downside. And so I found a proposition in the pound dollar pairing. Nadex sets propositions at every 20 pips, even numbers. So I found one at 1.71440. I sold the market at that point. I risked 50 to make 50, and the marketplace took off on me. And I was to the good all day long. I didn't have to worry about it. It settled. I made $50. So the rules that I have for this is to, once again, to check the economic calendar. The British news, most British economic reports come out at 4:30 in the morning Eastern Standard Time. If there are a lot of reports coming out of the UK, I will wait to make my decision until I see whether they are bullish or bearish reports, because it has a real effect on the pound. And I'll also take a look at the U.S. Reports that are coming up, because that may depend on where I want to actually set my expiration. If there are a lot of very strong, if for example, if the British pound is really bullish in the morning hours, I know the direction will be down, but I may cut it off at 7 a.m. instead of 3 p.m. in the afternoon if I'm coming into a lot of U.S. news that might affect me adversely. I check the daily charts of the pound dollar. Is the bias up or down? I look at the daily low or high between 2 and 5 in the morning. If the low has been established, then I'm going to buy the market. And if the high has been established in the morning, then I'm going to sell the market. And if it's really, really sort of congested or consolidated and you really can't tell, then from my perspective, I'm just gambling. I don't do it. The strike price that I'm going to choose is, I'm going to try to find the strike price with $50 to risk $50 at 40 pips above the morning low if I'm buying, or 40 pips above the morning high if I'm selling the market. And the pound dollar currency pairing basically has, it moves in excess of 100 pips every day. So I want to be moving, I want to set something where I can be in the money, get my 50-50, and let it ride. And I don't have, unfortunately, I haven't built a nice little table of the trades. I can do it, I just don't have it for this presentation. But if you go back through the pound dollar pairing, you're going to find that, let's take a look at today. Okay, this is an hourly chart of the pound, 2 o'clock, 3 o'clock, 4 o'clock. That's the window you're looking for. Downward bias. I'm thinking about clock just hit. The low for the day had been established. If I can come up right around here, about 40 pips up, I'm to the good. In fact, I took a look at this a little bit early. Same deal between 2 and 5. 2, 3, 4. The bias is moving up. That's telling me that the low is going to be back here at this wick. Go 40 pips up. The day is going to finish above there. That's a winner. This one here, 2 o'clock bar, was bearish. 3 o'clock bullish, very bullish. I'm saying the low has been established here. It runs long all day long. Don't have to worry about it. This one here, was actually a loser. There wasn't enough movement. The market ran sideways. So if I went 40 pips up, if I got it, well, if I'd gotten this one where I wanted to, like down here, I would have been good. But if I used my rule and 40 pips up into the money, by the time 3 o'clock hit, I would have lost this one. So when you look at the pound dollar pairing and you just go back and take a look at the hourly chart, you can do it on your own and just take a look at the 2 to 5 time period, and if you can identify a low or a high, most of the time you're going to see that it will set the upward or downward trend for the day on that currency pair. It's like a seesaw. And then the 20% of the time that it doesn't happen, the lower the high established itself in the afternoon, and it was just, it was just a messy day all the way around. But once again, if I can risk 50 to make 50, and I can get 70 or 80% probable chance of being in the money, you're going to make money, you're going to achieve consistency, and that's what I'm looking for as a trader. So I've kind of covered two strategies that I use. I mean, I spend quite a bit of time with both of these strategies. I look at them every day, and the more you actually stay involved, looking at particular markets, the more attuned you become to them. So questions, do I provide a buy and sell alert? Yeah, can this be applied to the euro? Yes, it can. It can be applied to the, let me see what let me see the forex pairs. The euro USD and the euro pound pairings, you can do this with Nadex. And for the British pound, you can do it for the pound dollar, pound yen, pound euro. Was this helpful, by the way? Or did this make any sense? I'm so used to doing it that it's kind of fun. So, I'm showing you something that's working with a small account, but you can scale this any way you want. The forex strategy that the London breakout strategy, I want to do a little comparison. To make that strategy really work, to make $500 a day, you have to have a $2,000 standard lot investment involved. You're risking $200 to $300 to make $500, and it works a good 70% of the time. So, I mean, you have a lot of money at risk to make that. And if you wanted to scale Nadex to that level, that would just be a function of just, doing 5 contracts instead of 1 contract, risking 250 to make 250, and risking 500 to make 500, or 400 to make 600. You can scale it any way you want to if you want to put that kind of money at risk. But you don't have, with Nadex, what you are risking per contract is your margin. You can't have things run away from you. And so it's really well worth taking a look at if you like to keep your risk capped, and you don't want to be surprised. You know exactly what you can profit, and you know exactly what you can lose. So the rest of it is you've got to have a really, really good, reliable directional strategy. And when I sit in on webinars and I listen to these great presenters talking about futures and options and stocks and all of their strategies, every once in a while I come across one that has a very, very strong directional binary proposition to it. And then when I see it, I test it, and if it works, then I go live with it. For swing traders, do you need to worry about overnight gaps? I think that's just a function, maybe, maybe not. I just don't worry about, what I take a look at is on the overnight time frame, what is the daily chart telling me? Is this thing moving up or down? I'm right now, I'm doing an experiment where I'm placing trades at 8 o'clock at night, my time, with an expiration at 7 o'clock in the morning. But I have to have the directional bias of the market going. I need to know that I feel pretty good about this from an analysis of the daily charts, from the hourly charts. And if I feel really good about it, then I might just throw risk $10 or $15, 20 max to make $80 to $90. And, you know, when you do that, you only have to be right 1 or 2 times out of 10 times to make money. So I want the technical analysis to be there. I don't like throwing money away, but I can sleep really well risking 10 to make 90. I don't know if that answers your question, Dan. Do I have any strategies that yield better than 1-to-1? Yes, I do. Once again, I place limit orders and all the time. And you know, if I'm using, if I'm not applying this strategy, and sometimes when I take a look at the markets, I'll just test it. I mean, I'll just say, hey, I want to risk 35 to make 65. I want to risk 30 to make 70. Take it or leave it. And sometimes it works. I find that the more the more directional a market is, the cuter I try to get with my risk to reward, the less likely I'm going to get to be filled. But the strategy that I'm testing right now, where I make the trade at 8 o'clock at night for something that's going to expire at 7 o'clock in the morning, there's a lot of time out there. The market can do crazy things overnight. And let's say I want to sell the pound dollar tomorrow morning because I think it's going to go down. Well, I will put a sell order that's into where I think into where I think the money is going to be tomorrow, knowing that there's a 100 plus or so pip range. And let's say the market's moving kind of sideways to slightly north overnight. I might get my fill. Then the UK announces some bad economic news. The pound dives right through my target zone. I've won a few of those trades. So I do have strategies that yield better than the 1-to-1. They just don't fill all the time. And nothing makes you feel better than, you know, risking $20 to make 80 for contract trading. But, you know, for me, that's also knowing that every time I do that, there's a greater likelihood that even if the contract gets filled, you know, I might not win that one. So Bill says, so 2 to 5 a.m. is low or the high. Then you want to look for the move between 8 o'clock in the morning to 2 o'clock Eastern time in the afternoon. And you'll just be surprised. I mean, when I heard about that plan, I had to back check it. And I went back like about 2 months and I went, wow, this happens, you know, at the time I was looking at it, which is the summertime, it was happening like almost every day. And the only time with the pound dollar that it got really kind of squirrely was the week that Scotland was voting for its potential independence, and the pound dollar just misbehaved that entire week. It was like, you know, letting air out of a balloon and just letting it fly all over the room. It was diving, climbing, moving sideways, going down. Kind of reminded me of what crude oil looks like every day. So I couldn't find the directional bias, and I just stayed out of it until the vote settled.